The Nasdaq 100 and the S&P 500 are a little bit disconnected, to say the least. But as we look at tech, as we look at, big names, Apple, Microsoft, Google, Amazon, Tesla, etc., right? Semiconductors, they continue to push. They continue to show strength and they continue to lead the market. However, there were some big concerns today, and I believe we may have woken up maybe a sleeping giant in the market, if you will, that could cause some issues down the line. Jamie Dimon had a lot to say about this, but let's talk about the technicals first around the Nasdaq and the S&P 500, and then we talk a little bit more about the fundamentals. Now we see here, this is the weekly chart here on the Nasdaq, and we've been talking a lot about this. As you can see, we had a bull flag structure basically going on from the beginning of April into the basic beginning of May. We pushed out and now we're pushing near the top. If you get a better visual of something like the daily, I think you get a little bit more answers, right? It's almost more of an ascending triangle they have kind of formed out here, a key sign for continuation we've been talking about, right? And as you can see, we continue to want to push, and we're going to go more in this here in a second. But today was interesting because if we look here, look at where you found support. You tell me what this means. I'm just tell me, right? Our swing high that we made, a new local high for 2023 on the Nasdaq. You push up, rejected multiple times in this range. We push up yesterday. Today, what happens? Out of the gate, we get a test of lows near those, these recent highs. And now we bounce off of that as a support. Do with that as you will. We go to look at ES. ES is still clearly trading in this range. Now, we're going to discuss and break down the significance of this, but this definitely leads you to a few thoughts of, if I'm looking to go short, I think there's a clear answer. And if I'm looking to maybe go long or be a little bit bullish in the market, I think there's also a clear answer. Now, when we look at this, I think tech has the value right now. Tech, it has got to be what you're looking at for more upside potential with the AI craze, overall earnings still doing decent despite being in a recession. We need to think about that. While the market experiences the most contraction, the lowest growth overall, some of these earnings, some of these companies can still produce. They can still hang with the big dogs. Now, before we jump to any of that, to ask you to consider doing two things, and I'm not going to go long into this. Consider liking and subscribing. Every single day here on the channel, we make videos for you, going over our fundamentals and the technicals, breaking down news you need to know, but also giving you maybe an unpopular opinion. We don't care if you like it, but we got to give you the truth here on the channel every single day, unbiased to the point. The Discord link is down below if you are interested, just so you know. And again, this is not a signal service. It's somewhere that you can get educated and start to understand what's happening in the market, key things that we're watching, get a watch list every single day. And it's like the newsletter, but maybe a little bit on steroids, giving you a visual of the only thing that I traded today. It was Apple. Again, the same trade I took yesterday. I even posted it on Twitter for free as well if you were following on Twitter. Apple, 172.5, May 19th next week, stops under 195. Again, the lows from yesterday. What happened? You went to 250. You ended up running 20%. By the end of the day, you pushed new local highs like we anticipated. What did we say here when we got in? I think we break over the 173.8 level, but this is only target one. And then I said we're probably going to break through highs. We ended up doing so. They went to 310. I cut my entire position, made around $1,400. I was up around $1,500, but then my stops, I just moved them up, and that's where I ended up getting out. That's what we traded today. But on top of that, you get the watch list every single day, showing you what to be looking for, the key levels, everything in between, setting up the entire game plan for you. Again, but let's get back to the video. Now, when we jump in here, I want to, we'll come back to the technicals. Right? We've gone over, basically there's not too much to say. I could try to sell you on us maybe pushing up, but I don't want to convince anybody. But I do want to talk about some maybe the controversial issues that are out here right now. One being what Jamie Dimon said today. Now, he had a few things to say. Now, first of all, he said he will not be buying any more failed banks. He said it's a lot of work. I know, Jamie, owning over 12% of all consumer credit here in the United States, it's a lot of work. We salute you for it. And you should thank your boys over at the Fed for allowing you to surpass all the legal amounts of debt that you can own. Yes, you should not be able to own over 10%, but they made an exception for their boy Jamie. Now, he also said today, and I didn't bring this up, in the video. Yeah, I don't have the link up for you guys, but you can go check it out. He said that you should not be allowed to short banks in America. He said that this is a crime. What they're doing, it's manipulation, and they're taking advantage of companies in the market. Again, yes, Jamie Dimon said you should not be able to short banks. It's a little interesting if you ask me. Now, Jamie Dimon also said this, and this is not like a Jamie Dimon video, so I'm sorry, but he had a lot to say this morning. He said bad commercial loans on real estate are going to be one of the biggest issues right now. And he also said, and this is what he had to down to this morning, he said that commercial real estate could lead to the demise and crash of more banks across the board. And he kind of incentivized and kind of put this out there that it's not just the small banks, maybe some of the bigger ones. Now, if we do see a bigger bank crash like Wells Fargo, Chase, Citi, something along those lines, one of the big boys, it makes you wonder, what's really going to happen out there. And even though I'm technically looking from this viewpoint of expecting upside on tech, I will say if a big bank like that goes under and we start to see one of the leading consumer banks that everyday Americans, we could see some real bank runs. Yeah, we've seen some already, but it could get really scary out there. And I don't think the reaction would be the same. Okay. Now, Charlie Munger and Warren Buffett as well covered this. If you guys didn't look over their big investor meeting over the weekend, but Charlie Munger said, pretty simply put, he sat back, it was eating his fried chicken, chilling, eating terrible, like the absolute G that he is, and said, spoiler alert, banks are full of bad loans. It's what they do. Now, the last thing out there too was just getting you commercial real estate losses may result in banks crashing. Again, so a lot going on there specifically today. That was the bad news. The good news, PPI, inflation data. It does appear to be dropping, but we have to understand. You have to look deep at the numbers. Yeah, it looks a little bit beneficial in the short term, but it's not necessarily dropping like we expect it to. But the market doesn't really care. And that's ultimately what we're playing here. I love to go over, different game theories and what's happening with the market and what to expect. But at the end of the day, when it comes to trading, all I care about is what's in front of me, right? I care about the picture in front of me and how I can make money off that. And then how, hopefully I can maybe give you an edge or tell you something to look at or tell you some stocks have potential, right? That's the point here. It's not really for me to be this big, bad, strong guy. It's to try to help you guys as much as possible and maybe point out some weaknesses in the market that you can take advantage of. And what do we know? Anytime this data comes in either flat or better than expected, we continue to move up. Why? Because the Fed has already stated they believe they may be at a restrictive enough level, and they want to focus on getting consumer credit, at least those rates, a little bit higher. And that's the next level to kind of attack this unemployment data, right? So it's in all benefit of if it come out just as expected, that guess what? More likelihood of a pause. And that's ultimately where we're at right now. Okay, the next thing though, and again, I'm just going over broad news today. Elon Musk, if you saw this big pump that we had here at the end of the day, Jesus, what a move. You went from 169.5 up to highs of 174. Absolutely crazy. He basically said that he's stepping down as Twitter CEO. He hired someone else. And, this is just what he's going to be doing, just overseeing what's happening. Not really, hands-on as much anymore. Now, again, interesting. Does Tesla deserve this move up? Maybe, because they are so heavily shorted. But I don't think Elon ever really stepped away from Tesla. I'm just going to say that right now. Interesting reaction. Congrats if you made money on it. Looks good. And again, inverse head and shoulders still 100% in play. As we look at here, something like on the 2-hour time frame, you can still clearly see your shoulder, head, shoulder, and you just continue to make higher lows, pushing up and up and up. So you still look good here on Tesla. I'm not going to deny that. Fantastic looking setup. Now, again, going back into the Nasdaq. Well, what are the expectations here? Now, again, this is my opinion and this is my view of this. So if you have questions, I would love to go over those. So please leave your comments down below. But as we look at this, what's continued to happen? We had that, the pennant form out here in February, right? And going into the end of March, you drop down with some of that bank news, hit the 200 SMA, and you shot up, right? Same thing, kind of just consolidated here. And then we started making higher lows continually. And that's where ultimately you get this idea, you get the thesis of the ascending triangle that had formed out. It's because you continue to make these higher lows into that basically top zone around 13.35. And that's how we've been moving, right? I'm not just making this up. If you have questions, again, I would love to cover them. Now, on top of that, your previous high right here. And what's the basis of establishing just a technical bull trend, right? Higher highs, higher lows. That defines a bullish trend or a channel or whatever you want to consider it or call it. And what you're doing here is exactly that. You make another higher high on Nasdaq, you retest your previous high, and then you bounce and push right back up. Now, I get it. The confusing part here is ES and where it's at. ES is still clearly in the trend. You're not above 4,200. It's a little bit scary. Now, if I'm looking to go short anything, I would want to go short on something like the SPY or the Dow. It would make more sense. Why? Because the areas of the market like today are getting the most downside are going to be banks, these specific sectors. Look at the market today. You open up, you just gap down from 32 all the way down to almost 31.75. Some downside there, a full percent give or take just on the ETF. And banks start to get hit, right? And again, even some energy names getting hit again. XLE dropping back down. The barrel dropped a little bit today as well, right? Now, are these names going to be affecting something like the Nasdaq? Not necessarily. The Nasdaq is not going to be made up of primarily bank and oil and energy names. You need to understand what's happening. But we look at names that are heavy in the Nasdaq, such as XLK, the big tech sector, and guess where you're at here? You're actually already broken out higher than the Nasdaq on XLK. XLK, again, 10% of the XLK is made up of Microsoft, 10% is made up of Apple. Look at where you're at. Guess what? You are not only higher than where you are. The Nasdaq relatively is right here at August 29th highs, roughly. Right now, you are already almost above August highs, going back to the NQ to give you a visual. Gee, no, I'm not making this up, right? So these are your local highs, 13.7. That's our target right now, right? You're already at this level relatively on XLK. So you can see those names really moving stronger, retaining a lot of that strength. Again, something like semiconductors, SOXX, what's happening there? You know, you've already got above those August highs previously where we pushed up higher. You're kind of consolidating here, but again, you're still consolidating on some of these big names, but you've had the biggest and best run and the quickest run on semiconductors, recovering back to where you were, right? This is very important to realize because really, if you look back at August, what happened was Jackson Hole, and that's when the market took like the big slump, really the ultimate decline to your new 52-week lows and your overall lows on this whole downtrend, right? So we need to understand that. Again, this isn't me trying to paint a picture of why we have to be bullish or necessarily bearish, but it's really to paint a picture of really just where we're at and how we're moving here. And to understand the areas of the market that are getting the love and the areas of the markets that are kind of being held down, if you will. That's just ultimately what's happening here. Now, giving you a visual of some of the volume, some of the action happening behind the scenes here. Again, you didn't have a lot going on today. And we're going to go to volume here in a second, but when you look here, again, the biggest thing if you're here, and this is Bookmap, the link is down below, you can check them out if you want. Basically, it's level 2 data, just visualized if you are unfamiliar, right? So it may look a little bit clunky, but what you're looking at, these are buyers, these are sellers, and you're breaking up and breaking down, giving you a visual level of where that volume is at. Now, if we look here, yeah, you have some orders, like this is one of your bigger orders, 1,000 lots, here near the morning, but you didn't really have anything else, like nothing. And this morning, if you were in our live stream every day, around 10:30 a.m. Central, we're live here on the channel, going over the market, answering questions, talking about stocks you like. Now, if we look here, you just held here all morning. Even though shorts tried to push you down, stacking the positions, you can see a buyer just sat here at 41.20 and held you up. Even though 41.38 is your big, really big resistance and, support level up there, right? That was the level you wanted to get, beneath to really start pushing down, but it just couldn't work. And then we see basically throughout the rest of the day, minimal volume. You don't get a lot of movement. You push up from 41.20 to 41.38 and just do kind of nothing, right? Just for the rest of the day, kind of dip here into, 1 o'clock, 2 hours before power hour, and then you see a buyer finally step in around 1,300 lots, which is around, I believe, $250 million, give or take a little bit more than that. And then you start pushing up here in the ES, and this is S&P futures. But that being said, there wasn't no crazy buyers. There really wasn't nothing crazy. I would say the biggest and best buying you got was here near the end of the day going into tomorrow. And again, 700, 1,000, nothing crazy, nothing outlandish. Volume was pretty dry here on ES. Again, we saw a lot of the buying happening with tech. That's what you need to understand. Now, the question is are you lagging in volume because of the debt ceiling? Are you lagging in volume because this is a false breakout? Well, like what's really happening here? So we need to understand that as well. Now, when we look at the ES, it's important to realize it can't be a bull trap. It can't be a false breakout because you haven't broken out. Okay, that's important to understand. It can't be really a signal per se because you're in the channel. You're just sitting in resistance. This is a clear resistance over the past month, 2 months, give or take, right? Now, the Nasdaq is clearly above that resistance and pushing up by itself. So that's important to realize. You can go into volume and see, scroll down just a little bit, go into historical data real quick, and you can see 68 million. Your average 30-day volume, I believe, is 74 right now. So you came in close, but nothing crazy, not a big beat, nothing like that. It was just kind of flat. I mean, a little bit under with that. I mean, yesterday you did have some really nice volume to the upside as you pushed local highs and got the breakout. It's important to understand that too. When do we expect, and what do we talk about a lot? When do we expect bigger volume? On the breakouts, guys, on the breakouts. So when do you get the most volume here on Nasdaq and SPY? On the breakout and on the, the recovery bounce that we had back here. So again, eye-opening, something definitely to be focused on as well. Going into cheddar flow. Now, I want to talk a little bit about a few things, and I'm kind of done talking about the SPY. I don't want to focus on those right now, right? I've covered those. I've given you what you need to know. Now, we had some interesting behavior here with the option chain. And today, just to let you know, this is not normal. This was Apple. And I just noticed this here at the end of the day. I'm going to be doing more research on this tonight, and I'll be posting on Twitter. The link for Twitter is down below if you want to see more of that. But Apple had some interesting behavior. Almost $600 million, $570 million, and options premium today. The next closest was 100 million. You can go to yesterday. What was your yesterday's? Your highest was 31 million the day before that. This week, what's happening here on this week. Let's get a load real quick. Apple's almost 700 million on the week. This whole week, though, Tesla's only at 100 million. Last week, this is just to give you a visual before we jump into this. Nothing's even coming close, right, to 600, 700 million, right? We understand that. Bearish flow, Tesla, a lot of bearish flow has been coming in. But as far as the call side, nothing's really been established. And this does include selling positions as well. Now, when we go into this, let's look really quick. And again, we'll go over SPY real quick just so you can see, nothing big here, guys. I'm not trying to hide anything. There's nothing really major. You saw some maybe hedges coming in here. And it's a great, if I'm going short on anything, I'm going short on SPY, and I'd be going long on Qs. I think SPY has more potential downside than the Qs do. Personal opinion, tech has all the strength right now. Going into Qs, see again, the chain looks like so much better. IWM, a little bit hit or miss, nothing crazy here though. SPY looks the worst out of all of them. Now we go to Apple, and again, this is crazy. Apple, just endless amounts on the May 19th chain. Endless. And I'll have all this information covered on Twitter later. Me and Cajun are probably be talking about this, but it's just absolutely crazy. So you definitely need to keep an eye on this. And if you want to get more detail, more education, that'll be on Twitter. So I'll be looking out for that. But again, today, I don't want to talk too much about stocks that I'm in love with, too much about stocks that I'm going to be going heavy into. I think right now, more than anything, you need to be relaxed. You need to be calm. You need to be collected. We've made quite a bit on a lot of these names. If you played Google, what did we say at the beginning of this week? Google and Amazon were your two most undervalued names out there. If there was anything to buy that gave you some safety and you could feel comfortable with, it was Google and Amazon. Go rewatch the videos from this week. Google, you broke above 108 and we pushed right into our level of 117, 117.5. If you go back here into about the weekly, you can also see this is basically your supply zone right there. Again, not making this stuff up. Amazon, we broke above, that 109 level, pushing back into the highs that we had back here from January. I believe this is around their earnings call as well. Really nice push here. The best movement these names have had in over 2-3 months. So you're getting that nice move. You had a lot of these good setups. Right now, again, I'm urging and trying to push patience. I do think if we start getting more of a breakout, ES can get some fall to the upside. Nasdaq will hit 13.7, but I'm just going to tell people, you don't want to be going long at highs. That's not what we want to do. And a lot of these equities have already broken out and really are moving. So just be careful. I urge caution. Few of the names I'm liking right now, if I had to play anything, I mean, again, you're gonna hate this. I still like semiconductors, guys. I still like them. Something like the 4 hour here on Nvidia, it still looks really good. In my opinion, you're flagging, you're trying to push up. On the daily in particular, you look incredible. You've broken above, you've mounted above, your level of 280. You're trying to go. You really want to push towards 300 here on Nvidia. AMD as well. I've been saying it. AMD wants to get above 99, 100. If it gets above 99 and 100, it's gonna be a monster. I still like it, still like the opportunity. And if again, you look at some of this action today, you just kind of flatlined here at 96 roughly. Great action so far. So again, if you get back above like 97.3, I like it towards the upside. Still looks decent. Again, you look at something like AVGO, again, all day long, higher lows were established, trying to break above, 630. You get above 630, you're probably pushing towards 640. Trade idea for you as well. That's my opinion. That's what I'm watching. Also to Tesla, just so you know, high possibility you could see some squeeze action into tomorrow. You have a gap towards 176, 177. Keep it on your radar. Favorite names. See you tomorrow. Have a good one.